Why did crypto lender Celsius Network halt withdrawals? What went wrong at Celsius Network? Why did it stop the withdrawals and transfers between the account last week? And is the platform in its decline? Hey folks, welcome back to Crypto World. We are back with another interesting video. Today, we are going to talk about why crypto lender Celsius Network halted withdrawals. So without any further ado, let's get into the video right away. The crypto lending company Celsius Network stopped withdrawals and transfers because of what seemed to be a liquidity crisis. This happened as the price of Bitcoin dropped to levels seen before the pandemic. Celsius, which offers high-yield returns on customer deposits, is the latest cryptocurrency company to fail as a result of the tightening financial conditions. It happens less than a month after the Terra-Luna stablecoin network collapsed. Celsius functions much like an unregulated bank in that it offers consumers high interest rates in exchange for cryptocurrency deposits and then proceeds to lend out those deposits to other Celsius users. Celsius claims that its loans are collateralized in Bitcoin, though not all of them are, and there is no guarantee that it will be able to pay out customers in the event of a rush of withdrawals. This is especially concerning considering that the price of Bitcoin has decreased by 40% over the course of the past year. Alex Mashinsky, co-founder and CEO of the company, has spent years condemning detractors for promoting FUD, which stands for fear, uncertainty, and doubt, over the liquidity of Celsius Network's cryptocurrency. Do you even know a single person who struggles to withdraw from Celsius? On June 11th, Mashinsky posed this question to venture capitalist Mike Dudas through Twitter. Why do you continue to spread FUD and misinformation? Celsius put a halt to withdrawals the following day on June 12th, citing severe market conditions as the reason. Since then, the value of CEL, a coin that was issued by Celsius, has decreased by 32%. So, what is the Celsius Network exactly? PitchBook reports that Celsius Network has a valuation of $4.1 billion following the conclusion of its most recent Series B investment round. Celsius Network is a sizable cryptocurrency company that is supported by venture capital. However, since November, the total value of the cryptocurrency market as a whole has decreased by more than 60%, resulting in a loss of market capitalization of $1.6 trillion, as reported by CoinMarketCap. A shocking proposition in comparison to traditional banks, which, according to the Federal Deposit Insurance Corporation, currently offer a 0.07% annual yield for savings accounts on average in the United States. Celsius provides its customers with an annual yield on deposits of 17%, making the company one of the most profitable. Crypto lenders such as Celsius are not regulated in the same way that traditional banks are, and they do not have fundamental protections such as deposit insurance. Deposit insurance has been an essential component of U.S. banking regulation ever since the FDIC was established in 1933 in response to the Great Depression. The crypto business is repeatedly learning all of the old lessons from traditional banking, said Todd Phillips, a former FDIC lawyer who is now the Center for American Progress's head of financial regulation and corporate governance. It's unfortunate because if we had just paid attention to the past, a lot of the hurts and losses that have occurred here could have been avoided. So, what about Celsius regulating crypto lenders? There has been a run of failures in the crypto lending industry, and it is abundantly evident that these companies need fundamental laws in order to protect their customers. The most recent of these disasters was Celsius. The cryptocurrency lending platform Cred apparently took out some risky loans, which reportedly led to its demise in 2020. The stablecoin Terra-USD and its sister coin Luna were both destroyed in May 2022, and a large number of clients withdrew their funds from the Anchor protocol, which provided customers with payouts of 20% in a manner analogous to Terra-USD. However, Celsius' most direct rival is the best indicator of the company's future difficulties. The well-known cryptocurrency lender BlockFi, which had been advertising annual yields of 9%, reached a settlement with the United States Securities and Exchange Commission in the amount of $100 million in February 2022 and promised to register its interest account product as security. Kabir Grewal, the director of enforcement for the SEC, issued a statement in which he cautioned BlockFi's competitors to take quick notice. After receiving legal threats from the SEC, the prominent cryptocurrency exchange Coinbase decided to shelve its plans to launch a cryptocurrency loan product in 2021. In a similar manner, Celsius has been served with cease and desist letters by authorities in 4 different states in the United States, including Texas, New Jersey, Alabama, and Kentucky, on the grounds that the company is selling unregistered securities. So far, no government action has been taken against Celsius, but that could change shortly. Lee Reiners, the executive director of the Global Financial Markets Center at the Duke University School of Law, was recently quoted as saying, "I'd expect some SEC subpoenas are coming if they haven't already arrived. I have no doubt that there will be some enforcement measures taken, not just by the SEC, but also by state security regulators." Celsius is set to be deluged by subpoenas and enforcement actions, he continued. "We are still at the beginning stages of this story." Is Celsius hurting the broader crypto market? The struggling cryptocurrency market is being affected significantly by Celsius's move. On June 13th, the cryptocurrency exchange Binance halted Bitcoin withdrawals in the wake of the Celsius news. As a result of this, the prices of Bitcoin and Ether fell by 11% and 13% respectively in the past amid an industry-wide sell-off. It is highly likely that the fall of the cryptocurrency market is tied to that of the regular stock market, given that on June 13th, the S&P 500 opened in a bear market region. On June 13th, competing company Nexo made an offer to acquire Celsius as BlockFi was in the process of announcing that it will be laying off 20% of its workforce. Phillips remarked that we are in the midst of a crypto winter. In the absence of regulations, businesses have a propensity to only have optimistic projections of the future and to anticipate solely that the value of their assets would continue to increase. Regulations make it more likely that they will have a strategy for the future if even asset values decline. I think there will be a lot more explosions because many of these things haven't been regulated. Reiners gave his own spin on a quote attributed to Warren Buffett: "When the tide goes out, you see who's swimming naked." What did the crypto lender Celsius say after the withdrawal freeze? After freezing deposits last week, Celsius Network Ltd. said in a blog post that it will need more time to stabilize its liquidity and operations. "We want our community to know our goal is still to stabilize our liquidity and operations," Celsius said on its blog. "This will take some time." The company has also stopped doing Twitter Spaces and Ask Me Anything, or AMAs, in the crypto world to focus on figuring out how to deal with these unprecedented challenges. Celsius wrote in the post, "The crisis at Celsius caused investors to panic about liquidations and a lack of cash, which ramped up the crash of the crypto markets. The biggest tokens by market value, Bitcoin and Ether, have lost 70% of their value. Three Arrows Capital, a crypto hedge fund, lost a lot of money, and Babel Finance, another lender, also stopped withdrawals. The token holders of Solon, a lending app on the Solana blockchain, elected to temporarily take over the account of a large user who was threatened with a huge liquidation. Celsius Network stopped withdrawals and transfers between accounts last week because of extreme market conditions. We are taking this action today to put Celsius in a better position to meet its withdrawal obligations over time," the platform said in a note on its website that users will still be able to earn rewards during the pause. Celsius Network is a big player in the crypto lending market. It raised $750 million in funding at the end of last year, but regulators are keeping an eye on the sector, especially in the crypto markets, which have been falling along with other so-called risk assets as interest rates around the world have gone up. The record-setting drop in cryptocurrency prices has put a lot of decentralized finance applications and their communities in a race to protect themselves from a wave of liquidations. So, that was all about this video. I hope you liked the information given in the video, and if you have anything on your mind, feel free to comment below. Also, don't forget to like, share, and subscribe to get more videos like this one, and hit the bell icon to get the notification of the latest updates on the channel. Thanks for watching!